I greet you all and welcome you to the Manifested e-learning platform. Today we are going to study the topic engagement and appointment. The subject is governance and compliance audit. The lesson is acceptance and professional appointments. Acceptance and professional appointments. Those are two things, candidates. Acceptance and professional appointments. And acceptance and professional appointments refers to the formal process by which an auditor agrees to undertake an audit engagement and is officially designated as the auditor for a specific company. And this process is governed by professional standards, legal requirements, and ethical considerations. So first of all, we are going to study acceptance of engagement from the perspective of the auditor. Acceptance of engagement. Acceptance from the perspective of the auditor. Acceptance of engagement, because it is the auditor that accepts an engagement. The auditor is approached and requested to act as the auditor of a firm. So the auditor may accept the engagement, or the auditor may reject the engagement. So before formally accepting an engagement, an auditor, whether for financial audit or governance audit or compliance audit, undertakes critical pre-engagement procedures to ensure they can perform the audit competently and ethically. So when approached by a company to act as an auditor for the company, you have to carry out what you are calling here pre-engagement procedures to help you ensure that you can perform that audit competently and ethically. So what should you do before accepting an engagement? Now, before accepting an engagement, number one, as an auditor, you need to carry out an evaluation of the client. Evaluation of the client. You evaluate the client. You can do an evaluation of the integrity of management. Okay? Integrity. For example, integrity of management. And in evaluating the client's integrity, you carry out an assessment of integrity. Assessment of integrity. Assessment of integrity. This is very paramount. The auditor must assess the integrity of the principal owners of the company, the integrity of the management, and those charged with governance. And this involves inquiries of previous auditors. Okay? You have to contact the previous auditor before you are appointed, so that you can do what we call professional clearance. You can also do inquiries of third parties. You get information from the banks, the legal counsel, industry peers, and so on. To help you carry out assessment of the integrity of the company, you can also review publicly available information about the company. You can read news articles, regulatory filings, litigation history, and so on. There is also the consideration of any unusual business risks or practices. And for public entities, you may need to carry out an understanding. You understand the political and ethical environment. You understand? So you assess the integrity of the company. All right? Then there is also significance. What does that mean? Now, if the auditor has doubts about the management's integrity, they should decline the engagement, as a lack of integrity can significantly impact the reliability of information and increase audit risk. So the importance of carrying out assessment of integrity is to enable the auditor make a decision, so that if there are any doubts about the integrity of the company, then you don't accept the engagement. That's the first thing to do. Evaluation of the client. Before accepting an engagement, carry out an evaluation of the client and assess the integrity of the client. Assess the integrity of those charged with governance, the integrity of management, and so on. Then the second thing to do before accepting an engagement is evaluation of professional competence. Evaluation of professional competence and resources. This is a evaluation of professional competence of the auditor. After assessing the integrity of the client, you now look inward. As an auditor, are you competent enough to competently carry out the engagement? Evaluation of professional competence. Do you have the required skills and knowledge? Required skills and knowledge. Before accepting the engagement, you gauge yourself, you carry out self-evaluation. Does the audit firm possess the necessary technical expertise in the relevant area? The area could be corporate governance, it could be specific industry regulations, it could be IT systems, it could be data protection laws. If you are to carry out an audit that encompasses those areas, do you have the required skills to carry out such an engagement? Then there is accreditation and licensing. Accreditation and licensing. Now, for governance audits, you check if the auditor is ICS accredited. Is the auditor an ICS accredited governance auditor? And for statutory financial audits, is the auditor registered with the ISPAC? And does the auditor hold a valid practicing certificate issued by the Registration of Accountants Board? For legal compliance audits, are they LSK registered advocates? For data protection, are they or will they be Office of Data Protection Commissioner accredited? So you check accreditation and licensing. Previous candidates, we studied the qualification requirements for auditors. One of them is accreditation and licensing. For you to be accredited, you need to undergo various examinations and training. So before undertaking or accepting an engagement, you check as an auditor, are you accredited? Do you have licensing? It's very important to check or evaluate the professional competence and the resources. All right? And resources. Accreditation. Then there is time and resources. And time and resources. Does the firm have sufficient personnel with the right experience available to complete the engagement within the proposed timelines? We also check time and resources. In evaluation of professional competence and resources, you also evaluate specialists. Specialists. What does that mean? Now, if the engagement requires specialized knowledge, for example, valuation or IT systems or environmental regulations, can the auditor engage qualified specialists, or does the firm have them in-house? So that is evaluation of professional competence and resources. Now, before accepting engagement, the third thing to do is evaluation of independence. Evaluation, conflict of interest. Evaluation of independence and conflict of interest. Evaluation of independence and conflict of interest. Before accepting an engagement as an auditor, you are required to evaluate your independence in fact and appearance. Independence in fact and in appearance. Independence in fact and in appearance. The auditor must be and be seen to be independent of the client. This is a fundamental ethical requirement. You also need to check threats to independence. Are there any threats to independence before accepting an engagement? Are there any threats to your independence as an auditor? Auditors must identify and evaluate any threats to independence, such as self-interest threat, self-review threat, advocacy threat, familiarity threat, intimidation threat, and so on. So the first threat is self-interest threat. Does the auditor have any financial interest in the client? Does the auditor have loans from the client? Or has the auditor loaned the client? That's a threat to independence. There's also the self-review threat. That means having provided non-audit services to the client, for example, preparing financial statements that they would then audit. Are you the one preparing the financial statements of the company that you seek to audit? If that is the case, then there is a possibility of self-review threat. Then there is also advocacy threat. That means promoting the client's position in dispute. If you are promoting the client's position in a dispute, then there is an advocacy threat. So you need to evaluate such threats. Then there is the familiarity threat. Familiarity threat means having close relationship with the client's personnel. Then another threat is intimidation threat. This is where the client threatens to remove you as an auditor. So after analyzing the threats to independence, if there is any threat to independence, then you need to ensure that you have put in place safeguards. If threats are identified, auditors must apply safeguards. For example, rotating engagement partners, using different teams for non-audit services, independent reviews, or sometimes you may just need to decline the engagement if safeguards cannot reduce the threat to an acceptable level. So that's a third thing to do: evaluation of independence and conflict of interest. So before accepting engagement, number 4, what do you do as an auditor? You need to review the engagement terms. Review of engagement terms. You don't just accept all engagements. Before you accept an engagement, you have to review the engagement terms. Review the client's request for proposal or proposed terms of reference to ensure they align with your capabilities and acceptable professional standards. You also need to review the engagement terms in order to ensure clarity on scope, objectives, deliverables, and responsibilities. And if terms are unacceptable, they must be negotiated and agreed upon before acceptance. So review engagement terms before accepting an engagement. Then there is what we call professional clearance. Before accepting an engagement, you need to seek professional. What does that mean? Now, if the auditor is replacing a previous auditor, professional ethics requires them to communicate with the predecessor auditor. This is to ascertain if there are any professional reasons that may prevent them from accepting the engagement. That is to ascertain if there are any professional reasons like issues of management integrity, the scope limitations imposed by management, which could prevent them from accepting the engagement. So before accepting an engagement, if there is an outgoing auditor, you need to seek professional clearance from that outgoing auditor. Find out from the outgoing auditor why he is no longer acting as an auditor for the company. You may get information from the outgoing auditor that may cause you not to accept the engagement. It could be the issues to do with the management integrity, or the management may impose limitations which could prevent you from accepting the engagement. You may also just need consent from a prospective client, which is required for predecessor auditor to respond. Before contacting the outgoing auditor, seek consent from the prospective client. Okay? So that's what should be done before accepting an engagement. Then once all pre-engagement procedures are satisfactory, you need to carry out all these procedures. Now, if it is clear with you, and once you have carried out the pre-engagement procedures and you are satisfied, you may then accept the engagement. That is when a formal engagement letter is issued and signed by both parties. And this engagement letter formalizes the terms of the engagement as detailed in the previous response. Engagement letter is then signed by both parties. So that's all for professional or acceptance of engagement. Candidates, our lesson is on acceptance and professional appointments. So we've been analyzing the procedures, pre-engagement procedures. We've said before accepting an engagement, before formally accepting an engagement, an auditor, whether for financial compliance or governance audits, must undertake critical pre-engagement procedures which you have discussed here. One is evaluation of the client's integrity. Number two, evaluation of professional competence and resources. Number three, evaluation of independence and conflict of interest. Number four is a review of engagement terms. 5, professional clearance. Then 6, engagement letter is signed by both parties. That's the first part of this lesson, acceptance of engagement. Then there is professional appointments. Professional appointments. Professional appointments. Professional appointments. Professional appointments. This is the client's formal designation of the auditor. Professional appointment refers to the formal act by which an entity officially designates the auditor to perform audit services. And this process varies depending on the type of entity and the nature of the audit. Do you understand? First of all, we need to understand what do we mean by professional appointment. It refers to the formal act by which an entity officially designates the auditor to perform audit services. Officially, this is when the auditor is officially designated the title, the auditor of company A, B, C, D. And the process varies depending on the type of the entity. For example, you may have for companies under Companies Act. Those companies that are formed under Companies Act. Number one, we have companies under the Companies Act. Under the Companies Act. Professional appointment. How is it professional? How is professional appointment for companies under the Companies Act? Now here we have first auditors. First auditors. Because companies, candidates are registered, may be registered. So formal registration of incorporation of companies under the Companies Act imply the formation of the birth of a company. So companies have a birthday, so to speak. So for the first auditors, if a company is formed today, when is the auditors, at what point are auditors appointed? So for first auditors, you may have directors' appointment. They are appointed by directors. That's what I mean by directors' appointment. Directors' appointment. The initial auditors of a company may be appointed by the directors at any time before the company's first annual general meeting. Because candidates, we know that according to the Companies Act, ideally auditors must be appointed by the shareholders during the annual general meeting. But if a company is registered on January 1, the earliest you can have an annual general meeting is 31st December. But you see, these companies that are registered under the Companies Act are required to audit financial statements. So for such companies, before the first annual general meeting after 12 months, AGM, the first auditors are appointed by the directors, okay, before the company's annual general meeting. So these auditors hold office until the conclusion of that AGM. So before the AGM, first meeting, the first auditors are appointed by the directors until that first AGM, when the members may confirm these auditors or may appoint a new auditor in the first AGM. Then there is members' appointment. Members' appointment. Appointment by members. Appointment by members. Now, if the directors fail to appoint the first auditors, the company members or shareholders may do so by ordinary resolution. Then you have subsequent auditors. Appointed. One, for private companies. For private companies, a private company must appoint an auditor for each financial year unless directors reasonably resolve that audited financial statements are unlikely to be required, e.g. for very small companies that qualify for audit exemption. So the appointment is usually made by the directors or members by ordinary resolution. That is for private companies. And for public companies, Public companies are generally required to appoint auditors at each AGM. That is what the Companies Act states. That is section 721. These auditors hold office from the conclusion of that AGM until the conclusion of the next AGM. These are subsequent auditors. After the first auditors are appointed either by directors or members, any subsequent auditor of a public company is appointed annually. The appointment is done annually. And the auditor holds office from the conclusion of that AGM until the next AGM. Then we have deemed reappointment. Number 3. Deemed reappointment. Now, for both private and public companies, an auditor is often deemed to be automatically reappointed at the next AGM without a specific resolution, unless they give notice of unwilling to be reappointed, or unless they give specific notice on resolution, or when resolution is passed at the meeting that they shall not be appointed, or a resolution is passed to appoint someone else, or they have ceased to be qualified for reappointment. So for subsequent auditors candidates, auditors are deemed to be reappointed. If you are appointed in 2024, you are deemed to be reappointed automatically in 2025, unless the auditor gives notice that they are unwilling to be reappointed, or unless there is a resolution that is passed at the meeting that they shall not be reappointed, or there is a resolution that is passed to appoint someone else, or the auditors have ceased to be qualified for appointment. Maybe their license is cancelled, or they are unfit for one reason or the other to be reappointed. So that's what we refer to as deemed reappointment. So candidates, we are discussing professional appointments of auditors under the Companies Act. All these, what I'm discussing here, these are provisions of the Act. It's not what I think, but what the Act states. Okay? What the Act states. For example, this issue of deemed reappointment is in line with the section 742. This is section 742. Section 742. That is a deemed reappointment. You understand? So we are discussing professional appointments of auditors under the Companies Act. So we've discussed the first auditors, there is the subsequent auditors, then we have what we call casual vacancies. This is B, then C, casual vacancies. Casual vacancies. Now, if a vacancy arises, for example, due to resignation or death or incapacity, that directors may fill that vacancy. You understand, candidates? We have casual vacancies. What do we mean by casual vacancies? A casual vacancy may arise due to resignation, death, or incapacity. And when that happens, the directors may fill the casual vacancy. So the appointed auditor holds office until the next AGM. So casual vacancy may arise due to resignation, resigning. The auditor may resign. The auditor may die, death. The auditor may be incapacitated. When that happens, the auditor is replaced. The directors may fill the vacancy, and the appointed auditor holds office until the next AGM. That is casual vacancy. Then 4, we have appointment of companies. Appointment by the registrar of companies. Now, if a company fails to appoint an auditor at an AGM, the registrar of companies may appoint a person to fill the vacancy upon being notified by a director of that company or a member of that company. So, candidates, we have discussed professional appointments of auditors under the Companies Act. Now, we want to move to the second part of the lesson, and this is the state corporations. For state corporations, this is for companies. For state corporations, candidates, the law is different. For state corporations, we are guided by the Public Audit Act. Public Audit Act. The Public Audit Act guides the appointment, professional appointment of auditors for state corporations. Now, the primary and of course the Mwongozo Code. So first of all, candidates, the primary external auditor for all national and county government entities, including state corporations, is the Auditor General. So here we have the Auditor General. The Auditor General is the external auditor for all government entities, including state corporations. The Auditor General, whose office is established by the Constitution and operationalized by the Public Audit Act, and the Auditor General's appointment is constitutional and does not follow commercial procurement process. It's a constitutional office. Then we have legal auditors. Legal auditor. Apart from the Auditor General, we have the legal auditor for state corporations, and here the Mwongozo Code. Now, the legal auditor, Mwongozo mandates that state corporations undergo comprehensive and independent legal audit at least once every 2 years. And here, candidates, the appointment of these legal auditors would typically follow a public procurement procedures as described later on, candidates, as described earlier on. So the appointment of the Auditor General does not follow the public procurement procedures, but when appointed of companies. Then we have explained how auditors for state corporations are appointed. Here we are guided by the Public Audit Act. But firstly, we've stated that the Auditor General, the primary external auditor is the Auditor General, who is the auditor for all national and county government entities, including state corporations. And the office of the Auditor General is established by the Constitution and operationalized by the Public Audit Act. We also mentioned that the appointment of the Auditor General is constitutional and does not follow commercial procurement process. But for legal auditors, because we know the Mwongozo Code mandates that the state corporations undergo compliance audit at least after every 2 years. And this legal auditor who carries out this compliance audit, the appointment of this auditor, the appointment of these legal auditors typically follow a public procurement procedures. They typically follow the Public Procurement and Asset Disposal Act. Then we have discussed number 3, the appointment of auditors for regulated financial institutions like banks, SACCOs, insurance companies, reinsurance companies. We've seen that the auditors of regulated financial institutions are appointed by the board of directors of those institutions, but they are approved by the respective regulators. If it is the banks, then the central bank approves. If it is the insurance company, then we have the insurance regulatory authority. If it is a SACCO, then it's approved by SASRA and so on. Then we have also discussed the appointment of auditors of other organizations like NGOs and foundations. In closing, candidates, it's important to remember that the acceptance of an engagement by an auditor, because we began by studying the acceptance of an engagement. Acceptance of an engagement by an auditor involves diligent internal assessment of the capability, the independence, and also the client integrity. It's also important for you to remember that the professional appointment then formalizes the acceptance through statutory means for regulated entities or contractual agreements for the other entities, culminating in a comprehensive engagement letter that defines the terms of the audit. And that's all for our today's lesson on acceptance and professional appointments. Thank you for choosing to study with Manifested Publishers. We will continue to share knowledge in governance and secretarial audit in our subsequent sessions. Bye-bye.